Let's begin this show by asking for your appraisal of the performance of the erstwhile Minister of Finance, Wale Edun. How do you think Wale Edun did perform as the Minister for Finance in the last three and a half years?
Oh, well, he was there for 2.5 years. Yeah. August 2023 to April 2026, 2 years and 8 months. And the president had been magnanimous enough to give him an opportunity to spearhead economic coordination and finance. And to the credit of the president and to his credit, they met an economy that suffered growth deceleration, suffered accelerating inflation, suffered weak exchange rate, weak reserves, and market liquidity across all segments were very weak. And to the glory of God, to the credit of the president and to the credit of Mr. Wale Edun, they have brought the economy to a much better place than they met the economy. Growth has accelerated to twice the level they met it. Inflation has decelerated to significantly a much lower level than they met it. They met growth at 2.5%. They have raised it to 4%. They met inflation at 22%. It's now at 15%. So they've doubled growth. They've cut inflation by a third. The Naira, they met multiple exchange rates. They left a unified exchange rate. And if you look across market segments of liquidity, reserves was at $4 billion. It's eightfold now. They have it now at $35 billion. Market capitalization was at 30 trillion. It's now at 141 trillion. Money supply, M2 was at 55 trillion. It's now at 124 trillion. And the bond market was at 53 trillion. And it's also now well above 80 trillion.
Fantastic.
So,
fantastic.
So they have improved the economy remarkably.
Fantastic.
Unfortunately,
yes.
Unfortunately, the federal budget did not reflect much of this economic progress. The federal revenue remained, very close to what they meant. At 7 trillion is now only at about 10, 12 trillion.
All right.
And the capital project funding is at an all-time low level.
Yes. So
FDI is very poor.
Fantastic.
So you may say economic success, but budgetary challenges persist, which Mr. Taiwo Oyedele now has to resolve.
All right, I'm happy you went this route. You actually did highlight a few of the success stories of Mr. Olawale Edun. However, you also did express a few of concerns that his administration did bring about. Let's begin to break it down. Let's begin to look at the tax before the man Taiwo Oyedele. Now, debt management for many Nigerians remain a huge concern. How do you think Taiwo can shuffle this concern, or should approach this whole concern around debt servicing, debt management, debt repayment, and all of that, because it's very key to the entire growth trajectory of our economy?
Well, the president, in his wisdom, has now, put Mr. Taiwo Oyedele at the helm of the affairs of the Ministry of Finance and the coordination of the economy. Yes, Mr. Taiwo will be inheriting a lot of positives from Mr. Edun's era. But the economy is in a much better place right now market liquidity is at much of the liquidity measures at maybe 2-decade peak. You know, the buoyancy of the foreign reserve, the buoyancy of the equity market is only comparable to what we had in 2008, which was at the end of at the peak of the economic expansion that Mr. Obasanjo just saw and handed over to Mr. Yar'Adua. Market capitalization is back to $107 billion now, where it peaked in 2008. And reserves, net reserves are also close to the peak we have previously seen. And therefore, Mr. Oyedele's job of connecting FGN budget to the improved economic realities is made fairly simple. He does not have to look for money. The money is there. You know, the stock market, the equity market has year to date created $42 trillion. You know, so all the deficit that needs to be funded in the 2026 budget is 31.
Unfortunately, Dr.
But the
Teriba,
stock market.
Unfortunately, Dr. Teriba, there was a bit of a disconnect between Mr. President and Mr. Wale Edun talking about our revenue calculation. We didn't hear Mr. President tell us that we've met revenue targets, and shortly after, Wale Edun came to say we have a shortfall of about 30 trillion or 3 trillion naira. I mean, you were saying that there's
a disconnect between Mr. President and Mr. Edun.
Yeah, in terms of revenue, meeting our revenue targets.
Yes.
Yeah. So I mean, I'm amazed. You're saying that there is so much money right now for Mr. Oyedele to work with, so meaning that his job is quite easy. I don't know where we're getting the disconnect from. Are you really sure that we have enough revenue to run this economy, as been said by Mr. President? When you begin to look at all our expenses and all our expected liabilities,
there is a favorable economic environment which Mr. President.
Okay, we lost signals there.
Assisted by Mr. Wale Edun.
Yes.
The simple challenge is as follows: federal government revenue is not reflecting the economic expansion that the president has achieved. So you need to connect the budget, the federal budget, to favorable economic developments.
All right.
Market that has created 100 trillion naira since the president took over. So the budget is disconnected from the stock market, is disconnected from the favorable foreign reserves, is disconnected from the favorable banking system. So we are saying that we can't fund capital projects, but you've got 28 trillion in cash reserve deposits, which is earning zero interest rate. We are borrowing money from foreign banks, but you have $20 billion sitting in CBN coffers, just as CRR balances.
So are you?
So Mr. Oyedele's job is as simple as.
You are opposed to our external borrowings. We did hear that Mr. President is asking for an approval for an extra $516 million from a Dutch bank. And you are saying we have some revenue balance.
That's the letter.
Yes. So you think we shouldn't be borrowing anymore?
Okay, if you give me. No. Nobody is saying you shouldn't be borrowing. If you give me 30 seconds, I will lay out the point I'm making.
Okay, go ahead.
You need capital markets to finance capital projects. It does not make sense to expect that government will have the revenue to fund capital projects. Revenue is current year income. Capital project is investing into the future, several years into the future. So it makes sense. The golden rule is that you should only borrow to fund capital project investments. So there's nothing wrong with the president raising money at home and abroad to fund capital projects. So if you are using it to build capital projects, like you want to build a road, You are building that capital project for future generation, and it's only fair to let future generation, do part of the repayment. Irony is that Nigerian federal government is getting money from Citibank in London. They are getting money from the bank in UAE. They are getting money from Deutsche Bank. But you have $20 billion sitting in CRR balances and in zero interest rate in the CBN coffers. So they're not getting money from Nigerian banks. It's a disconnect. Reconnect that. We are trying to borrow. Okay, if you add this half a billion dollars to the $6 billion that we heard about in the last 2 weeks, all of it less than $7 billion. The stock market has created 41 trillion, 42 trillion. 3.5 months, in 4 months. That's $30 billion that the stock market has created. If this was Saudi Arabia or China, government will be sitting on 10 to 40% of that money. Here in Nigeria, we don't look for equity, we only look for debt. So there's nothing wrong in the president, borrowing money to finance capital projects, but the president should equally consider not using only debt for all his deficits. All right. To use equity. We have a buoyant portfolio. We are not raising that equity. We are just borrowing money. And we have reserves that has increased, net reserves that has increased it for FDI. So I encourage the president, I commend him for all the successes he has achieved.
It's important that Nigerians begin to feel the impact of these positives that you have reeled out. So how soon do you think Taiwo can begin to translate these physical policies to tangible realities, reduce unemployment, reduce the cost of living for Nigerians? Because that it itself is the concerns for many Nigerians.
Well, it would not be fair to say that Nigerians are not feeling the impact of the economic improvement. The exchange rate is now at 1,350. From where? 1.5 years ago, it was at 1,900. The impact of that appreciation, I feel the impact of. We don't have multiple exchange rates.
I think you're using the
exchange rate.
You're using
inflation has dropped from 35% to 15%.
How has that created jobs for Nigerians? And how has that reduced the cost of living for Nigerians? Dr. Teriba, how has that reduced the cost of living for Nigerians? How has that created jobs for many Nigerians? These are the tangibles that Nigerians want to see.
Job creation comes with a lag. Much of the companies that are now, posting favorable results on the stock exchange, whether they are communication companies or breweries or cement companies, were making losses 2 years ago. In the past 1 year, they are posting profits. They must have improved employment, but that will come with a lag. Let's not deny that things have improved across the board for Nigerians. As a matter of fact, the only aspect that needs to be improved for the Nigerian economy is that let the federal budget reflect these improved economic measures. So the economy has improved. The impact on the life of Nigerians would have happened.
It is not my figures. Dr. Ayo Teriba, these are not my figures. The DMO brings out the figures. The NBS brings out the figures. Improvements are tangibles. We want to see employment figures come down. We want to see the cost of living come down.
We have not seen employment. We have seen growth figures. We have seen improved inflation figures. We have seen stable exchange rate figures.
Those are not tangibles.
And employment figures will come.
Those are not tangibles, Dr. Teriba.
That's the point.
Those are not tangibles.
Poverty is not a leading indicator. Employment is not a leading indicator. They are lagging indicators. And all the leading indicators that have come in show improvement. Therefore, those lagging indicators will follow. That's the point I'm making.
See,
this is not the economy that President Tinubu inherited in 2023.
We have to let you go. But then before we go, in 60 seconds, could you highlight for me one of the biggest challenges you think the man Taiwo Oyedele might have to cross? One of the biggest challenges he might have to face?
Let the federal budget be connected to the improved economic realities. That's his only challenge.
Why is it a challenge? Why do you think it's a challenge?
Yeah, because the fiscal disconnect,
that's the word,
comes from the fiscal disconnect means that the improved market conditions, the government doesn't use equity. 100 trillion has been created in the 2 years that Mr. Tinubu has been there. Government is not issuing the equity. So Mr. Oyedele should use equity. The 40 trillion or so that is locked up in CRR and the facility should be released for intermediation. So as Citibank is giving us money, as Deutsche Bank is giving us money, let Nigerian banks put counterpart money there as well. So that's the only disconnect. Just reconnect the budget with the favorable economy, and we'll all be good.
Thank you so very much, Dr. Ayo Teriba, an economist and the CEO of Economic Associates.
Thank you very much.
Thank you for your time with us on today's business. Most definitely we'll touch base with you again in the nearest future. Thank you and do have a great day.
Thank you.